Deep Dive, your go-to for unlocking complex topics and getting straight to the most important insights. Imagine a digital asset that just seems to defy market gravity, not just soaring, but really redefining what's possible in decentralized finance. Today we're taking a deep dive into exactly that, the Hyperliquid protocol and its native HYPE token. Our mission for you, our curious listener, is to sort of crack the code on this fascinating story, from the market data to the strategic moves, and help you understand what's truly driving its, audacious momentum. Think of it as your shortcut to navigating a really dynamic, fast-paced corner of decentralized finance.
And what makes this story particularly compelling is the timing. So on July 12, 2025, the HYPE token hit a new all-time high, $47.30. And this happened precisely as Hyperliquid's open interest, which is, the total value of all active positions on the platform, surpassed an incredible $10.6 billion. This isn't just coincidence, it's a powerful demonstration of a positive feedback loop, where growing confidence and activity in the protocol directly fuel the demand and, the value of its native token. We'll definitely unpack this fundamental connection.
Okay, so the HYPE token has certainly been on a tear, hitting new all-time highs recently. For our listeners, what's the headline figure here, and what's the core reason we're seeing such aggressive upward movement?
The headline is indeed that new all-time high, $47.30 on July 12th, after trading pretty consistently in the mid-$40. What's truly driving this isn't just, hype, if you'll pardon the pun, but it's a strong signal of market confidence. And if we put this within a broader context, HYPE's market capitalization now sits impressively between $12.4 billion and $15.3 billion. To give you a sense of scale, that puts it firmly within the top 10 cryptocurrencies if you exclude stablecoins. So it shows it's not just some niche player, but a really substantial asset with significant market recognition.
That's a huge leap, putting it right up there with some of the industry giants. And when we talk about what truly makes HYPE tick, it often comes down to its tokenomics, essentially, the economic rules embedded within the token itself. Can you break down the most impactful elements here, like the vesting schedule and why these buybacks and burns create what people call a real yield model?
Right. Think of it this way. The HYPE token has a total supply of 1 billion, but the current circulating supply is only about 333.92 million, so roughly a third. The vesting schedule is like a carefully managed release of tokens. It prevents a sudden flood onto the market. Team tokens, for instance, they're locked up until 2027, 2028, and a substantial chunk, 39%, is reserved for future community rewards. So this careful supply control, combined with a crucial deflationary pressure, that's a core driver. Hyperliquid reinvests an impressive 97% of its protocol fees back into HYPE buybacks, meaning they buy tokens from the open market, and then subsequent burns, which permanently remove them from circulation. It's a powerful deflationary pressure, kind of like a company consistently buying back its own stock. And it directly ties the token's value to the platform's actual success, its fee generation. This creates real yield because the value comes from actual protocol fees, not just speculation.
That makes sense. A clear incentive for long-term holding, right? Now, beyond the fundamental economics, traders often look at technical signals for clues about, future price action. For those of us who aren't charting gurus, what are some of the key indicators suggesting this upward trend has real legs beyond just a momentary surge?
Absolutely. We're seeing some robust indicators, like HYPE effectively rebounding from a key demand zone around $39.20. That suggests strong buying interest at that level. The 20-day exponential moving average, which is a popular trend indicator, is curving upwards around $40.87. That signals a clear return of bullish momentum. And interestingly, the token has formed an ascending triangle pattern just below its all-time high. Imagine the price hitting the same ceiling repeatedly, but bouncing from a higher floor each time. This typically means buyers are gaining strength, pushing the price towards a potential breakout. And if that breakout happens successfully, it could see the price extend well into the $50 range. Also, the Relative Strength Index, or RSI, which measures the speed and change of price movements, it currently stands at 59.51. Now, that's considered strong, but it's not yet indicative of extreme overbought conditions, so there's potentially ample room for further price appreciation.
Those numbers certainly paint a picture of relentless upward movement for the HYPE token, but as you mentioned, its value is deeply intertwined with the success of the Hyperliquid protocol itself. So let's pivot a bit and explore that. Just how dominant is Hyperliquid in this incredibly competitive space?
That's a really important question about market leadership and operational scale. Hyperliquid officially announced on July 12, 2025, that its open interest, that total value of active positions, had surpassed an unprecedented $10.6 billion. This new historical high is a critical indicator. It shows a substantial and growing volume of active positions, reflecting increasing trader confidence and, deep liquidity within the protocol.
That $10.6 billion in open interest is indeed massive, huge number. But in a volatile market like DeFi, does a high open interest always translate to stability? Or could it also signal maybe potential for larger liquidations or market swings if things go south?
That's a crucial point. You're right. While it indicates deep liquidity and confidence, it also means there's a significant amount of leveraged capital at play, which is why monitoring broader market conditions is always key. You can't look at it in isolation. However, Hyperliquid's trading volumes are equally impressive. They're consistently high, often exceeding $1 billion daily. And they even surged to $8.4 billion in the 24 hours leading up to July 10th. Average daily volumes are reported in the $2-6 billion range. That's contributed to a remarkable lifetime volume that has now surpassed $1.88 trillion. These figures really highlight the platform's robust activity and its capacity to handle large-scale trading.
Okay, zooming out for a moment then. By mid-2025, Hyperliquid had apparently solidified its position, capturing an impressive 80% of the decentralized perpetual contracts market. That's a massive jump from its 30% share back in November 2024. How on earth did they achieve this kind of near monopoly in such a high-value niche within DeFi? What's their secret sauce?
Yeah, that growth is quite something. Their secret sauce is really rooted in technical superiority. Hyperliquid distinguishes itself as a high-performance Layer 1 blockchain. Think of it as its own foundational network, like Ethereum or Solana, but specifically engineered for decentralized finance, purpose-built. It features a fully on-chain order book perpetuals exchange, and at its core is HyperBFT, a custom consensus algorithm. This enables remarkably fast transaction finality. That's the speed at which a transaction is irreversibly confirmed, typically less than 0.2 seconds.
Yeah.
And it boasts the capacity to support up to 100,000 orders per second.
That's lightning fast.
Yeah.
For context, is that like trading on a major stock exchange, but, in crypto?
Exactly. That's a good comparison. The speed and throughput are comparable to leading centralized exchanges. exchanges. But crucially, all while maintaining the core principles of decentralization. This technical superiority, successfully addressing that long-standing trade-off between performance and decentralization, well, that's a direct and significant driver of its market dominance in the perpetuals trading sector. It truly levels the playing field for decentralized trading. And it's also worth noting its total value locked, or TVL, the total value of crypto assets deposited into the protocol. It ranks 8th among all blockchains, with recent figures around $1.69 billion. So significant capital locked in too.
Okay, beyond the impressive tech and the tokenomics, what concrete developments are fueling this phenomenal growth? What's attracting all this new capital and new users?
Well, a particularly striking development is the significant market reach expansion through major exchange listings. That always helps. HYPE's recent price surge is strongly supported by its listing on Binance US, which immediately increased its accessibility to a wider investor base in the US. And further enhancing liquidity and trading avenues, Bybit also announced a spot trading listing for HYPE with deposits opening just on July 11, 2025. These listings put HYPE in front of millions of potential new traders. It's a big visibility boost.
Now, on the institutional front, we're seeing some truly groundbreaking commitments. Can you walk us through the significance of this corporate treasury allocation news? Why is it such a big deal for, mainstream validation?
Absolutely. This is potentially huge. First, Grayscale, a major digital asset manager, included Hyperliquid, HYPE, in its Q3 2025 assets under consideration list. That's a key signal for potential future institutional investment products involving HYPE, sort of a stamp of preliminary approval. But even more groundbreaking are the actual corporate treasury allocations. You have the NASDAQ-listed Lion Group announcing its intention to hold $600 million in reserves with HYPE as its primary treasury asset.
$600 million. Wow.
Yeah. And then there's Inovia Inc., a US-based publicly listed company. On June 17th, 2025, they announced a $50 million investment to establish a Hyperliquid HYPE token cryptocurrency treasury reserve strategy. They plan to acquire over 1 million HYPE. They want to become one of the top globally active validators for Hyperliquid and, notably, the first validator listed on NASDAQ.
So they're actually putting HYPE on their balance sheet, like cash or bonds.
Yeah, exactly. That's the key thing. They even intend to change their name to Hyperion DeFi and their ticker to HYPD. So this convergence of major exchange listings and significant treasury allocations by publicly traded companies, it represents a powerful signal of mainstream validation, a deep vote of confidence.
That's a huge vote of confidence indeed, really legitimizing. And for user adoption, they've made a smart, strategic move partnering with Phantom Wallet. That's a popular Solana-based wallet, right? Over 15 million users. How is that integration expected to impact their growth trajectory?
Yeah, Phantom is very widely used. This integration is strategically aimed at simplifying access, lowering the barrier for new users, and it's expected to onboard a substantial number of new traders, which should thereby boost trading volume and liquidity. Makes it easier for people already in the ecosystem to try Hyperliquid. They also recently introduced something called a Core Writer Contract Mainnet Upgrade. It's essentially a smart contract designed to allow other decentralized applications, or dApps, to directly and seamlessly interact with Hypercore's perpetuals exchange.
Wow.
This lowers the barrier for dApp developers to build on Hyperliquid and potentially increases HYPE's utility beyond just trading and staking. It sort of opens up their core infrastructure to the wider DeFi ecosystem.
So we painted a pretty bullish picture of Hyperliquid's ascent. Very strong growth narrative. But every deep dive has its cautionary notes. What are the potential headwinds or things you, the listener, should perhaps be aware of?
Right, it's important to balance optimism with realism. While there's definitely strong underlying bullish sentiment, there are several cautionary points. For instance, the high fully diluted valuation, or FDV, that estimates the total market value of all tokens were in circulation. It's estimated between $38 billion and $46.27 billion. That's a very large number. And it prompts some analysts to question the current risk-reward ratio at these elevated levels, suggesting, maybe a lot of future growth is already priced in.
And there's some significant whale activity to watch. These are the very large holders and traders. We saw a whale acquire $8.66 million in HYPE tokens recently, signaling confidence. But just as recently, a newly created address deposited $4 million USDC into Hyperliquid to open a short position on another token, PUMP token. And concurrently, 3 major traders collectively deposited $11 million USDC on Hyperliquid to short those PUMP perpetual contracts. What does it tell us about the Hyperliquid ecosystem?
It really underscores Hyperliquid's growing reputation as a sophisticated trading venue. It's favored by large players for complex derivative strategies. It shows the platform isn't just for long-term HYPE holders, but it's becoming a robust market for a variety of advanced trading strategies, including hedging and speculation on other assets. People are using it for its core function trading purpose. The most immediate significant event on the horizon, though, for close monitoring is the scheduled unstaking of over $40 million worth of HYPE on July 15, 2025. That's coming up very soon. And notably, 3 whale wallets alone account for $33.5 million of this figure. This event is set to occur just ahead of the much-anticipated Kinetic launch, which is built on Hyperliquid.
Okay, that's a lot of HYPE potentially coming onto the market. $40 million worth. How might that impact the price, especially if those large holders decide to, move their capital elsewhere or just sell?
It's definitely a point of vigilance for traders. If that capital gets repositioned into the new Kinetic ecosystem, for example, rather than immediately sold on exchanges, it could actually further tighten the available liquidity for HYPE, potentially inducing what's called a post-launch squeeze, meaning less supply available for buying. However, if a significant portion is sold, it could certainly create selling pressure. It's a classic supply-demand dynamic at play. Depends entirely on what those whales decide to do.
Great. Another notable point of discussion regarding Hyperliquid is its decentralization, or maybe the degree of it. The network currently operates with just 21 delegated validators. That's according to later. Well, it stands in stark contrast to the much larger validator sets of other major blockchains like Ethereum's 14,000 plus execution layer nodes. Concerns have been raised regarding the team's ability to fast-track emergency decisions, which some people call moral hazard risks, implying a potential for abuse of power perhaps. And a 2025 audit by Certora did identify 12 smart contract vulnerabilities, though importantly these were promptly patched before anything bad happened.
So what does this all mean for you as someone trying to understand the full picture, balancing those decentralization ideals with practical performance?
That's the core trade-off, isn't it? This limited number of validators represents a calculated decision. It's a trade-off between achieving Hyperliquid's exceptional speed and throughput and adhering to, let's say, strict decentralization principles. The fact that the team maintains some centralized oversight for emergency decisions and that an audit successfully identified and patched vulnerabilities before any exploitation occurred, well, it indicates a pragmatic approach to security and efficiency.
Okay.
It means they prioritize speed and the ability to make quick fixes if needed. But yes, it's a departure from the pure decentralization ethos you see elsewhere. Investors really have to carefully weigh this operational choice against the platform's structural advantages and its demonstrated performance. It's a key philosophical debate in the blockchain space. How much decentralization are you willing to sacrifice for raw performance? There's no single right answer.
That's a great point about the trade-offs. Really something to consider. Okay, looking ahead then, analysts seem to have a pretty wide range of price predictions for HYPE. What are the key takeaways from these forecasts, and what are the crucial price levels you should probably be watching?
The general sentiment is definitely optimistic, leaning bullish. Some analysts are even starting to entertain the ambitious possibility of HYPE reaching the $100 mark eventually. Near-term forecast for the rest of 2025 suggests a potential high of maybe $47.50, $50 if the token successfully clears the current resistance levels. For the longer term, say 2026, predictions indicate an average price maybe around $49, with potential breakouts reaching $54.50 or higher. But forecasts are forecasts. It's crucial to watch a few key price levels right now. Immediate resistance seems to be around $44.22, and then that 41, 42 duo zone. On the downside, strong support levels include $39.20 and the 20-day EMA, which is currently around $40.80. If it fails to hold the $41.06 support, that could lead to a deeper correction, maybe into the $36.50 range. So vigilance around these specific levels is definitely advised for anyone watching the charts.
Okay, so wrapping things up, what are the key takeaways for you from this deep dive? Hyperliquid and its HYPE token are clearly navigating a period of, well, robust growth and increasing market validation. That's particularly on the back of its record-breaking open interest and those consistently high trading volumes we discussed. And its advanced technological infrastructure really seems to solidify its position as a dominant, high-performance player in that specialized, decentralized perpetuals market.
Exactly. And the HYPE token's price action directly reflects this underlying strength. It's consistently achieving new all-time highs and attracting substantial institutional interest and strategic partnerships, which we saw with those treasury announcements. While the long-term outlook appears fundamentally sound, largely due to its innovative deflationary tokenomics and that real yield model, astute investors should remain vigilant regarding that inherent trade-off between performance and decentralization that we just discussed. And of course, closely monitor the impact of upcoming large unstaking events, like the one on July 15th.
Right. The immediate future for HYPE will likely be shaped by its ability to decisively break and hold those key resistance levels we mentioned, and effectively absorbing any potential selling pressure from large whale movements, like that upcoming unstaking. That'll determine if it can continue its trajectory as a leading asset within the evolving DeFi landscape. So for you, the learner, here's a final provocative thought to ponder as we close out. Given Hyperliquid's deliberate strategy to optimize for a single high-value use case perpetuals trading, how might this focused approach influence the future of other specialized Layer 1 blockchains in the broader DeFi ecosystem? Think about how that specialization could either be a long-term strength, allowing them to dominate a niche, or perhaps a potential vulnerability if the market's focus eventually shifts away from perpetuals. Something to chew on.